Well, as expected, the interest rate hike cycle is hitting the residential property market. Bond approvals have been dipping since the central bank began hiking their repo rate, and that's according to the Better Bond Property Brief. The recently launched brief tracks monthly housing market trends and forecasts. But economist Roelof Botha, advisor to the Optimum Investment Group, contributed to this report, and he joins us now for a conversation. Well, thank you so much for your time, Roelof, and good morning to you. I suppose let's start with the impact of interest rates on bond approvals. How are they looking?
Bad, in a nutshell. There has been a significant drop in the number of new applications for mortgage bonds. As a matter of fact, it declined by 10% during 2022, and in the first quarter of this year, it declined even further. And it is a huge point of concern. Also, the average property prices are declining. Just when the property market was starting to recover quite well from the effects of the pandemic, we had a situation where we have 5 individuals comprising the Monetary Policy Committee of the Reserve Bank who think they know everything about economics, and they are trying to prevent a disease from a cut, maybe in your leg, by just putting a plaster over that. It's not going to work. Higher interest rates are not going to bring down global freight shipping rates, which is the main reason why the world is grappling with high inflation, in addition to energy prices.
And also, let's look at some home loan values now and house prices. How are they currently looking?
Well, you need R1 million to buy apparently a decent home, depending on your definition of what a decent home is in South Africa. Well, in any event, one that's mortgage backed by the banks. What is another point of concern is that the change in the average deposit of the purchase price for all buyers has increased, for instance, in Joburg Southeast by 18%, and in KwaZulu-Natal by 40%. The banks are trying to shield themselves obviously from possible defaults by asking a much higher deposit, which was not the case in 2020 and 2021, when the banks were really very kind to prospective homeowners. We had job creation. We created 1.4 million jobs in the economy last year. The economy is not down on its knees, but we do not have any demand inflation in South Africa. And that is why the Reserve Bank's Monetary Policy Committee has certainly lost the plot entirely as far as interest rates are concerned. It's not necessary to raise rates in South Africa. They're doing more harm than good. They've joined the enemy, quite frankly.
Also, I understand there's also a bit of a shift when it comes to home buyers' income. How's it looking like?
Well, that has been rather surprising. Despite the fact that home prices, the average home price in virtually all regions, the Western Cape is still holding its own. Greater Pretoria isn't doing too badly, and parts of Joburg isn't doing too badly. The average incomes of home buyers in virtually all of the provinces of South Africa has continued to increase, and one can actually expect that due to the rise, the really, I wouldn't call it spectacular, but the solid rise in formal and informal employment that occurred last year. Of course, informal sector employment doesn't do too much for mortgage-backed home buying activity, but certainly in the formal sector. So that's encouraging, at least.
Absolutely. And Dr. Botha, what about the rise that we're seeing here coming from the Western Cape?
Yes, the Western Cape, probably because of superior municipalities and superior roads. If you want to make some of the people in government now really mad, you must ask them how they like the roads in the Western Cape. The Western Cape has mastered the art of fixing a pothole. Apparently, it's not rocket science. There are many other provinces, several others, that apparently don't know how to do that, which is a huge problem. But just getting back, to the Monetary Policy Committee's decision to raise interest rates, the total value of outstanding mortgage loans in South Africa today is lower in real terms than it was 10 years ago. This economy has never been able to grow at sustained high rates unless private sector credit is growing. That is not happening. And the reason for that is the hawkish nature of the Reserve Bank's monetary policy. The inflation targets with which they are obsessed of 3 to 6%. When Christals implemented this many years ago, he said categorically that this is not cast in concrete. You can change these targets depending on your circumstances. So what happened? We got a pandemic, and global freight shipping charges increased by 800%, which, as I said, is the main reason for inflation. All they needed to do was to raise temporarily the inflation targets from 3 to 6 to 5 to 8, and then it would not have been necessary to raise interest rates at all. But right now, they are adding to the financial distress of South Africans. They've raised the cost of credit, measured by prime, by 61% since the end of 2021. I think this is absolutely shocking.
Dr. Botha, just before I let you go, if this precedence continues and obviously it continuing to affect South Africans negatively, what are the consequences of our economy to this?
The fact of the matter is that industries, individuals, businesses that rely on credit, that have to borrow money to conduct their business, for instance, new renewable energy solar panels, you have to go, many business individuals have to go and borrow that money to install those, the solar power. And that has become 61% more expensive to service that debt over the last, in less than 18 months' time. It is just absolutely crazy, and it will certainly dampen our economic growth prospects in South Africa. And there is another solution which is very pragmatic, and that is to, how can you allow a policy instrument which is so broad-based and affects everybody in this economy to be in the hands of 5 individuals? They should broaden change the composition of the Monetary Policy Committee to also include economists from the Department of Trade and Industry, from National Treasury, and from the private sector, so that we have a more democratic way of deciding about this instrument. There is no demand inflation in South Africa, and the Reserve Bank is doing a hell of a lot more harm than good to this economy of ours.
We'll leave it there. Appreciate you speaking to me about this. Economic advisor to the Optimum Investment Group and research economist, Dr. Roelof Botha. Thank you so much for your time this morning.